for some quick insight of how the institutional trader manipulate the market, how this sniper trading entry comes in. Like when you want to take a trade, you have to follow the way, or you have to think the way the institutional trader think. You have to follow their steps, what they think anytime they open a trade, what are they seeing, and what did they expect from rated traders. So let's move on now. So sniper trading concepts, the institutional trading method. So these institutional traders, they use this method to snipe that trade, to enter a strong move, buying the markets in a strong move, selling the market in a strong move. So that is about what I want to discuss today. Then tomorrow I'm going to show us some of the graph, like looking at the graph, the the way they manipulate the market, the way they enter the market, and the way the level they usually enter the market. So today is just like theory of how they control the market, sniper trading concept. So now when we talk about sniper trading concept, what is sniper trading? We know that sniper trading is selling into a very strong market or buying into very weak market, and sometimes called sniping. Okay, you sell into very strong markets or buy in a very weak market. It's called sniping. Let's take an example like a sniper trader, like a sniper now. Someone who is aiming at something. As a sniper, you aim at something. You don't just spread your bullets or you waste your bullet. You aim at your target, get close to it, or even far away from that target, and you aim at that person or aim at that target, and maybe you try to observe the movement if you are going to miss once you pull the trigger, or if it's going to hit your target. And also you also aim where you want to hit the target. Is it the head? Is it the toe? Is it the chest? Is it the neck? Anywhere you want to hit the target. So same thing goes to trading. Sniper trading entries. Sniper trading entries is where you enter the market and the market move very strongly to the downside or upside. If you observe some of the trade I usually take these days, except Friday, yesterday market was really bad. Yesterday I'm having some problem with my broker. I think I lost a lot yesterday. I lost a lot of money yesterday. I'm having some problem with my broker. I can't log into my NT4 platform, and I also can't log into my phone. On my phone, I didn't change the password. I didn't do anything. It's just that I want to log in and check what is happening to NFP news. So I found out that I can't be able to log in. Immediately I log in, I close the MT4. Then I want to open it again. It's telling me that my account is invalid. So I have to enter my account details. Still the same problem, and I've already opened a position. So I want to go back and check because I've already seen the market is going against our direction, our prediction. So I want to go back and check. The market has already run in big loss. Already the loss is too high. Though I have a stop loss there, but the loss is too high. I would have closed the trade early before I even get close to my stop loss. So I lose a big money yesterday. So I try to recover it. Maybe on Monday, I'll make sure that I'll recover everything on Monday. So I asked them, why is it that what really happened? All these days I've been trading with my on my phone, trading with my laptop and everything, so nothing happened. Why can't I just log in yesterday? I was unable to log in. Tried on my phone. I don't know how it happened. I tried on my phone. They told me what they told me that is a technical some technical error. Then I just asked them, is it the same to everyone? I don't think maybe some of you experienced that yesterday. Some of you are using the Jux Forest broker. I hope some of you did not experience that. But I don't think maybe it's from my side or I don't know. Because yesterday I checked everything. I didn't change password. I didn't do anything. So what am I saying is that I lose a lot of money yesterday, and I will make sure that on Monday I'm going to recover it. I'm going to recover it for sure. Next week I'm going to recover it. Now, if you observe some of the trade I will be taking since on Monday, even we might took a trade and keep the trade running for 2 days, it's because we want to make sure that we make a lot of money from this trade. Well, a lot of traders who will enter the trade and close the trade immediately, these are traders who are afraid. They are afraid to let the trade run. That is one thing about me. Once I follow a simple, so once I follow a simple trading rules, I always keep the trade running, set my stop loss. That is why most of the time I don't always close trade, even if it's getting closer to stop loss. If my trade is getting closer to stop loss, I don't always close the trade. I will make sure that it hits my stop loss. So I don't want to be afraid. Let me tell you one thing about trading. If you took a trade and the market is going against you and is about to hit a stop loss, let me tell you, if you are closing the trade too early because it's about to hit a stop loss, this and you are doing this often and often, you'll be afraid to even take a big a big amount of trade, like a big money. You'll be afraid that even though you can make $1,000 a day, you'll be afraid to even use that method or put in big money to trade. So something you try to let me say improvise yourself from the beginning will take you to your future, what you're going to become. So if you want to become a trader who is always afraid of not letting the market hit a stop loss, well, if you continue now, it will be that for you forever. That means you have to let the trade run and accept the loss. Accept the loss in such a way that you you are able to manage your fund very well. That even the loss is nothing to you, or even the loss you can still recover it with another trade. So let's say for example some trader who use bigger lot size and the market is going against their trade, what they do is they close the trade immediately because they didn't follow the good money management. Why must you be using bigger lot size when you're supposed to follow a good money management? So what I'm saying is that this since on Monday there are some trader we took that run for 2 days. Okay, that keep running for 2 days. We keep holding the trade overnight. The trade keep running for 2 days. The reason why I did if you observe those of you in the group, I usually take trade and close the trade for that day. I don't keep the trade running overnight most of the time. But when I now find out that okay, this let me start using this setup and let me not change my mind to start using other setup. Let me focus on this trading setup, which is called the institutional trading setup. So I started using that then, and it's a sign that it is something that once you are able to sight the the um, the zone or the level where you're going to enter the trade, it will be more easier for you to have confidence that the market is going in your direction. But expect something in the market. Market always retrace, and market doesn't go in a straight line. Markets retrace, come back, go, come back, go. That's why we call it the impulsive move and correction. So market will always correct itself to move in the direction you predicted. So what I'm saying is that When a sniper trader wants to enter the trade, what are they doing? They are selling into a very strong market or buying in a very weak market. So sniper trading is waiting in the wings to sell when there is a panic buying, or waiting to buy when there's a sellers when sellers are panicking. Okay, so you trade, you wait in the wings to sell when there's a panic buying. Like you snipe that trade, kill it, pull the trigger. Okay, you saw this trade, you enter the trade, you're expecting the price to go down, you saw it very well and you enter the trade, but you are still afraid to pull the trigger. Before you know, you end up losing the trade. So one of the more reliable area where market reverse is where they retest and hold high volume area. When they retest and hold high volume area, something like this. Give me some minutes, let me bring out my drawing tool. Okay, I'm trying to bring out my drawing tool so that I'll explain what I mean by retest and hold high volume area. So now, what I mean is that um, one of the more reliable area where market reverse is when they retest and hold high volume area. Hold high volume. So the high volume area that have happened in the past. Once the market came back and retest that area, it is very sure the market is going to reverse. Like for example, if the market is, let's say the market move high and drop drastically, then the market starts moving up again and down. Okay, it move up again and down, and the market now break this level and head toward this old high volume area, something like a supply around this area. So once the price reach that level, you snipe your entry, snipe the trade. Before you know, you see that the market will fall down like a water. The market will fall. Okay. So what you have to do is look for an area, an old high volume area. Wait for the market to retest. This is where the market dropped. Then the market came all the way to retest the level. It's the same thing like when you are trading a channel. Okay, the market is ranging inside this channel and break out the channel. Once it break out from the channel, it came back again to retest the lower trend line channel, and they drop drastically. Okay, so when you want to trade a sniper trade entry, you have to look for the reversal, when market reverse, when there is a retest of an old high volume area. Like I said, when we talk about sniping trading, we are talking about sniping trading is waiting in the wings to sell when there's a panic buying, or waiting to buy when there's a panicking, or when the sellers are panicking. Okay, so that's what we call the sniper trading. Now, institutional traders typically execute large order and head position to ride the trend. Okay, institutional trader, like if you observe throughout this week, AUD CHF, AUD JPY, AUD SZD is a downtrend throughout this week. It's in a downtrend starting from Monday. let's say last week, I think it was last week, after the market made some correction on Monday and still going down. So it's like a downtrend, which means the institutional traders have already executed a large order and held position to ride the trend. So when they held a position to ride the trend, you must know where they usually enter the trade, so that whenever you enter the trade, you will be completely right about this trade, and you'll be more confident even though the market play around for some time. If you observe don't worry, I will show you some of our trade, some of that our trade, the chart. If you observe AUD we took AUD I think on Tuesday, and still Wednesday the market hasn't moved down. It's still ranging below near our, it's still ranging near our entry level. It doesn't go down and it doesn't go up. So I said that okay, the market is getting to the third day. Should we hold this trade or should we close? So that's why I said let us close the trade. But magically, yesterday the AUD dropped. It dropped. Okay, so which means the institutional traders are still riding the trend. It's just that they took some break for that few days when the market is ranging. So when you know the where the institutional traders usually enter the market, you will feel confidence to keep your trade running, even without checking it. So when I know where the institutional traders usually enter the market, I just leave the trade running. Even though the market will consolidate, I'll keep the trade running. But for this consolidation not to just mistakenly hit our stop loss, that is when I will now close the trade if I'm not sure about the range. Okay, except if the market is going to hit our stop loss and continue to the downside or to the upside. So um, locals like retail traders, on the other hand, trade for one or two ticks many times during the section. Okay, so they usually trade large quantity. The institutional traders they usually trade large quantity for small profit and loss. An institutional trader might be do one trade for 1,000 contracts, while a local might do 10 trades for 100 contracts at a time. You can see the difference. The institutional trader they put in big money, okay, large quantity, big money to do one trade for 1,000 contracts, while the local might just do 10 trade for just 100 contracts at a time. So the point is short term traders tend to be more comfortable counter trading. So traders are competitive bunch and often seek to be the first seller at the end of an uptrend. That is what retail traders are doing. Retail traders are more competitive bunch and often seek to be the first sellers at the end of an uptrend, or first buyers at the end of a downtrend. Okay, like we all know the golden one of the golden rules in trading, which is always buy at the high. Sorry, always sell at the high and buy at the low. Sell high, okay. Sell at the high and buy at the low, okay. But eventually, if you are still buying at the high, it might just be that maybe you have some reason, good reason about the trade. But to be more confident about the trade you take, you have to sell from the high and buy low. Sell high and buy low. So that is why retail traders, when the price reach the uptrend or resistance level, they will quickly think of how they're going to trade and how they're going to sell this market immediately. But remember, institutional traders are there monitoring where you're going to place your stop loss. They were waiting for you to take your stop loss. So when you observe that okay, they are waiting for me to take my stop loss and for them to take my stop loss, then I shouldn't be in the trade at that moment. Let me wait for some time. Let me see how they're going to react to some traders who don't think of what they're going to do and they open the trade blindly. So let me see what they are going to do. if there's going to be any stop hunt setup. So once there is stop hunt setup, if you see the some of my traders stop hunt setup, okay, where the institutional traders usually trade anytime they enter the market, and how they hunt for stop loss. These are when I usually enter the trade to look for a sniper trade entries. Okay, so let's continue. Okay, now what do institutional traders study? Institutional traders are making trade for banks, insurance companies, or even hedge funds. These type of traders often get their education in finance or economic from a college. So someone cannot just think of being an institutional trader today. You have to pass through some process to become an institutional trader. Okay, you have to pass through some process. You have to know what are the economic data, how to read and interpret the economic data of a country currency. Okay, you have to know the inflation, the deflation. You have to know the rise and fall, everything you have to know it. So that is why some of these institutional traders, they go to college to study them, the finance or economy. So they are the one that even make trades for banks, insurance companies, and even hedge funds. Okay, so once you know how they manipulate the market, how they trade, how they enter the market, forget you get your sniper trade entries. You get your sniper trade entries with confidence. Okay, so today is just like a theory. Then tomorrow, going to show some of example how they enter the market and manipulate. So a market is thought to be overbought or oversold if it has moved the length of an average week in a 48 hours period. So the combination, that means if the market move of an average week in a 48 hours period, like if the market is still in the bearish down, let's say for on Monday, the market is bearish. Then Tuesday, market is bearish. Some people are still selling. Then Wednesday, the market is bearish. Some people are still selling. Some people are still selling. Before you know, the the market just quickly change direction in the they quickly change direction from that level. So a market is thought to be overbought, oversold if it has moved the length of an average in 48 hours period. The combination of a market that has hit resistance and is overbought is a good counter trade opportunity. Okay, it's a good counter trade opportunity. What I mean is that if the market hits the resistance, let's assume this is the resistance, the market hit the resistance. Okay, let's say the trend is moving higher. Okay, as the market is moving higher, the market now hit the resistance. So what do I mean here is that um, the combination of a market that has hit the resistance is and is overbought is a good counter trade opportunity, which means when the price hit the resistance is an opportunity, not to be afraid. It's an opportunity that you can start selling the market just to counter the trend. Okay, the trend is up. All these movements are called the counter trend. Okay, that a trend that is against the normal movement, a trend that's against the normal movement, they are called the counter trend. So on the other hand, the best time to counter trade a decline market is when it reach oversold status and has come into a support area. Pinpointing support and resistance area can be a difficult task. So one of the more reliable area when market reverse is when they retest an old high level, and hold high volume area. That is the only way you can. That is the only way you can trade the sniper trade entry. So pinpointing support and resistance can be the very difficult task. So one of the major reliable area where market reverse is where they, like if you are kind of trader who still struggling to identify support and resistance, I think you should start learning because support and resistance is one of the one of the uh, most method of trading, support and resistance, most method of trading. A lot of people, when they see the market move like this, something like this, up, down, immediately the price went down, it has already created resistance. Then up again, immediately the price went up, it has already created resistance. Then down, okay. So now, when the price now resume upward, it break the low, and a lot of people, sorry, it moved downward, it break the low, and a lot of people will start thinking of selling at the same level. Some people might have been thinking that, oh, this is a break and retest, let us sell. Before you know, they enter the market, and boom, the market simply goes up, hit a stop loss, continue to the upside. So here now, for you to be on the perfect side, you have to not enter the trade here, but rather enter the trade somewhere around here, because this is how the institutional trader do manipulate the market. When they see the market is at the support level, why should they continue again to the upside? Okay, why should they do that, continue to the upside? So that means when the institutional traders, when they are entering the market, they always watch out for where the we retail traders will place their stop loss, and they will hunt for that. Once they hit the stop loss, then there's nothing you can do about it. You can't go and meet them and argue about them. So there's nothing you can do about it. So the combination of a market that has hit resistance and overbought is good counter trade opportunity. On the other hand, the best time to counter trade in the decline market is when it reach the oversold status and has come into a support area. So pinpointing support and resistance area can be difficult task. So one of the more reliable area where markets reverse is when they retest and hold high volume area. I've said that before. So let's continue. So a market is thought, meaning all this explanatory is nothing to do with you not using the dictionary. So once you have the dictionary, you can take out from some of the words. Then again, what is market manipulation? All these are still part of the sniper trade entry. Once you know how the institutional traders manipulate, then you can be able to find out where they usually snipe their trade. Because you as a trader, or we as a trader, once we see the way the market moves, maybe up and down, we may be trying to take the trade and think the market will still go to our direction, but eventually the market will just change its direction and move in another direction. Okay, so market manipulation refer to artificial inflation or deflation of the price of a security, also known as manipulation or stock manipulation, price manipulation or stock manipulation. It involves the literal manipulation of a financial market for personal gain. So it means influencing the behavior of the securities with the intent to do so. So market manipulation can be difficult for authorities and market regulators, okay, to detect, given that multiple variables affect the price movement of a security. So some of these variables, they may not they may not even be perfectly quantifiable. Okay. So however, when detected, when detected, the market manipulation is met with serious civil liability. So once you are able to identify how this institutional trader manipulates, okay, how do they manipulate? Okay, when I know the where they manipulate, that is when I will open a trade. And you see the way the market move throughout Monday to Thursday, the way the market move, except Friday, which is very bad. Okay, Friday large day, because on that same week is that same day is NFP um, day. Okay, so that's NFP day, so the market will move the way it like. So Once you can able to identify the manipulation, how they manipulate, it's very simple. So there are several ways of manipulating stock prices in the market. Deflating the price of a security can be achieved by placing a significantly large amount of small order at a price that's lower than the current market price of that security. Investors interpret it as a signal that there's something wrong with this company. So a negative perception pushes investors to sell the securities, thus pushing the price of the stock even lower. That is what they do. The investors. Okay? The investors, I think I just came across a video last week. I don't know if you guys should know who I'm talking about. There's a guy also, he's a forex trader. I think his name is on his YouTube channel. His name is Dapo Williams. Is it Williams or something like that? He's a forex trader. He said that he mentioned something about how he make a $50 million with trade investors. Okay, so those people invited him that they want to invest with him. Okay, so he did agree with them, and he even said so many things. I hope you guys should go on YouTube, search for his name, for his name, and hear the whole story. So he was talking about the investors. Okay, so he was talking about the investors. Those investors putting big money to control the market. Okay, so investor interpret it as a signal that there's something wrong with the company. A negative perception pushes investor to sell the security, thus pushing the price of the stock even lower. So when they think about what is happening to this company, what they do is their perspective pushes the investor to start selling, even allowing the price to go deep lower. Okay, so one of the way of inflating the price of a security is by giving or is by placing an equal number of buy and sell order for the same security simultaneously, but by using different broker. Thus, the order cancel each other out. So the large volume of order executed gives an investor the impression that there is an increased interest in the country, convinced of the possibility of future price appreciation. Then they buy that security. Okay. Now let's move on. This is example of how the institutional traders manipulate the market. This is example. What they do is check. What they do is they go through the chart, look for possible, like how do they hunt? How do they hunt? So they check for clear technical levels. I'm talking about the clean support and resistance. I'm not talking about support and resistance that join together. Something like if you have a support here, you also have a support here, you have support here, you have support here, support here. Before you know, you didn't see any support, and the market start creating support. So this usually happen if the market is not good at that moment. Okay, so they check for clear technical levels that retail trader might use to hide their stop loss. That's what they do. They check for clear technical levels, support and resistance, the clear one, because that is when we retail traders usually want to enter the trade. We always want to choose the clean support and resistance level to put our trade in, to place our trade, but it doesn't work out that way. The the institutional trader are monitoring you. So before you know, they hit a stop loss and move in the direction you have predicted already. So entering a position that seek to target those stop loss orders. Okay. So enter a position that seek to target those stop loss order. Just enter a position that seek to target those stop loss order. So once you know where the institutional trader will hunt for your stop loss, that is where you should now place your trade. that is where you should not place your trade. Look at the graph. Look at this graph. Look at it very well. Look at, we have the resistance level, retail resistance, clean one. We have the resistance here. We also have the resistance here, the clean resistance level. So we also have the minor sellers buyers movement. Sorry, we also have the, it also work here, support. But I'm talking about the resistance now. So, or you can just call it the SNR, support and resistance. So this is a cleanse resistance area, which means when the price again come back to that same area, we have to sell the market. We have to sell the market. And that's exactly what is happening. So once they look at it very well that, okay, if you sell the market here, I know very sure that your stop loss is going to be somewhere around this area. That is what the institutional trader we look for. We do. So once they, sorry, let me add someone who wants to join the group. I think there's no one. So what they do is that they know that you as a retail traders, once you enter a trade here, you place your stop loss here, right? Or stop loss even little bit lower. Okay. For instance, this is where the market react. So because we are seeing some downtrend, then the market also react that once the price reach the level, we also expect the market to reverse to the downside. But they keep buying the market starting from here. This is where the institutional traders started. They keep buying the market, buying the market, buying the market. Before you know, they now hit a stop loss. Once they hit a stop loss, they will now succumb and change the direction of the next move. They change the direction of the next move. So they succumb to your prediction for a long while ago that, okay, this is what I need, this is what I need this time. So hope you th- just think of where they will enter the trade. Okay, look at it very well. We have the retail resistance and the institutional trader buying. This is a resistance, the retail traders resistance. Above it is where the sellers or retail trader will start placing their stop loss. Okay, they might place a stop loss a little bit above this, or place a stop loss just to confirm why the, or just to think of how the the the, the institutional traders, how the retail traders will place their stop loss. So once you see it, once you notice that, then you can now enter the trade. For me, that is how I'm going to enter the trade. I think this is KJPY. This is one of the opportunity that we lost, that we missed last yesterday on Friday. Okay, so assuming that we saw this kind of setup, we will have won the trade. So they know that they will set their stop loss here, some will set their stop loss here, some will use here, some will also use here. Like if I'm seeing now, it seems that they violate the first stop loss level, second, and the fourth. So as they have violated the level, the market is now moving in the direction we have predicted, which means we have predicted the price should go down by asking one of the um, by asking, by looking into it, how the sellers might enter. Something like, if the buyers keep buying the market and the market is going to hit the resistance, they have to break the resistance. And once the market break the resistance, that is when they will fall. Once they stop, once they onto your stop loss, that is when the market will start dropping. Same thing apply to downtrend and to uptrend as well. If you have somebody important to you that, okay, this is where I'm going to enter the trade, let me enter this trade here, and before you know, the sooner trader start buying, hit a stop loss and continue to downside. This is not your fault. This is really what the market want to do. So now the question is, how, this is another example, this is another example of a buy trade. Okay, if you look at it very well, we have this the retail stop loss. Okay, because we have a clean support level here. So this is retail stop support level, and this is stop loss hunted. Okay, this is the stop loss. Look at the lower shadow. The lower shadow touching this higher highs and higher low. Like this lower shadow touches um, the demand around this area before it's reversed to the upside. Why is it that we have the support here and we have support here? Instead the market to go up, the sellers still trying to form a momentum to the downside. Okay, so they still try to form momentum to the downside, and before you know, they they hit your stop loss and move to the option to the direction you predicted. That is why I since these days I don't know how to um uh, like since all these days I've been thinking why there must be a stop loss on. I think Friday was so many stop loss. Most of the time when we took a trade, the trade might be going to a direction before you know the market will just change the direction. It depends on how the news reacted. Assuming that there's no, I think the reason why, if you remember, some of you here, if you remember the first trade that we took on Euro AUD, the market did went to the direction that we predicted, even getting close to TP, and immediately the market just reverse and start going up very strongly. So when I now sit down and find out why is it so, because immediately the market starts going down to it is going down to hit a stop loss. So why is it so? Then I remember that okay, this is the most important part that you must know. Okay, know where the social traders enter the market. So I now find out that okay, this is what really happened. I check on 15 minutes time frame. I saw that the market did reverse from the strong demand zone, and the major trend is the trend is still up. So it's not like a breakout whereby we see a retest. Okay, like this is what I'm saying. I think the market is still bullish. I think the market is still bullish because if you see this kind of movement when the price touches a zone and continue to the upside, if the market is consolidating, forget about it, it's still bullish. Okay, this kind of trade is still bullish. Don't worry. On Monday, I will send some setup signal for us so that we make a lot of profit next week. So I just hope that we shouldn't have any stop loss by next week. So if you are here in this group and you want to participate in it, you can join the WhatsApp group, the Telegram group, and use it. So if you really want to be making weekend profit, I think yesterday I didn't make any weekend profit. Okay, not that I lose the whole money. I didn't lose the whole money. I know how to manage. It's just that I lose a lot. The money I lose, the money I lost is I have never lost that kind of money before. So it's something new to me. Something new to me. So that's why I have to accept it. Accept that. Okay, so I can't just walking around and go around and start um, placing order when I'm supposed not to place order just for me to recover losses. It's not possible that way. So that is how you can see from here the buyers buy the market. Instead of going up, the institutional traders keep selling until they finally once that means once you see the market structure like this, it's just like when you have a market structure, something like this. The market supposed to go up like others, it didn't go up, it just reversed to the downside. Okay, still by respecting this level. So in that case, if you want to be on the safe side, you shouldn't take any trade here once the price reach this point. Don't say because the price break, let me wait for the test. No, you might wait for a test if the market is going against you. So what you have to do is wait for the price to come close to this level, then you place your trade. Or if you are placing trade in the downtrend, always wait for the price to um, come close to a certain level, identify it and place your trade. So the traditional traders, this is their trading method. If you have heard about the Wyckoff trading scheme, okay, this is part of it. All the analysis is from Wyckoff. So they use most of the Wyckoff analysis trading method. Most that is what they use. If you check very well, that most of the time I don't usually give signal. I think 3 weeks now I don't give signal of trend line. Except if I see a trend line, then I saw some kind of pattern where I usually trade. Like if this is going to be a strong bull and it's not a short bull and they continue to the downside. So which means I have to wait for the price again to come close to that level by not just to touch the um, horizontal level just by um, horizontal, sorry, not because not that it's supposed to touch the trend line level, just as it's going to form a pattern, like observing the structure. Once the price got the pattern from this level, okay, so they don't make use of this kind of trade. What they do is make use this kind of trade. So when the price retrace back, it didn't just reverse. It might as a binary, that's why I say binary trader is different. So if you are a binary trader, once the price reverse, you should know that the market is going to reverse to the downside as well. So that means here as a forex trader, once the price is reversing, do not take any trade. A single candle can just form. Now go straight to the the level above it. The level above it is what we call um, the stop loss level. So, or the resumption of the stop loss. Okay, so that is it. That is the negative side of how the okay. So now, how do they hunt? They check for clear technical levels that retail traders might use for their stop to hide their stop loss and entering the position that seek to target those stop loss order. So I think I've said that before. Now, how to be safe from stop hunt? How to be safe from stop hunt? Don't use the obvious level to hide your stop. Don't use the obvious level. Obvious level can be used as a zone. So don't use the obvious level. Market might just come close to the obvious level and hit a stop loss wherever you place your stop loss. If the market is heading toward the support, you should close the trade, or you should try to find out before you open any trade. Is this going to be is this level I'm drawing, is it the obvious level? Okay, so stay away from obvious level, stay away from obvious level to hide your stop loss. Don't use that to hide your stop loss. Okay, just find a good one, then use that to hide your stop loss. So now let's go to the chart. Let me show you some of the things, how to get a sniper trade entry, some of the things that some of the trade that we took, and some that did went to the direction that we predicted, and some did not. Okay, some, I think most of our trade this week are perfect. It's just that we didn't close the trade when the market is about to run a course. It depends on how the market presents itself. Yesterday, suppose AUD Euro AUD supposed to be down no matter what. Euro AUD supposed to be down. Okay, but because of the news, I thought the news is controlling the market, so that is why we were able to lost the trade. So let me start from AUD card. Do we take any trade on AUD cards? Let me Okay, so what I'm saying is that on AUD card, you can see that the trend is very strong to the downside. Now, look at how the institutional traders manipulate. Look at it very well. Look at it very well. Okay, this level is where we rated traders buy the market when the market approach the level. So we have this at the support. We have this at the support. We have this at the support. From the support, the price went up. From the support, the price went up. Then from the support, the price don't really go too far. They start, let's say for example, you start trading, you start looking for a way to benefit from the market. Then you go for short cut. Short cut won't help you out. So what is this? I thought I want to. Okay, so let me start from Hero AUDCHF. Okay, see that here only few buyers left out. That is why the market couldn't go far. Only few buyers left out. So as the market couldn't go far, they created a supply that break the level. Like they start selling again. They start selling again after so many consolidation here. They start selling. The professional traders, the institutional trader they start selling, and as they are selling, they manage to push the price down and take their profit. Then once again the price still came back to revisit that level, and that is when the market dropped. Look at the candle that formed, a single candle, a single one red, sorry, single one red candle, very strong candle compared to this is just a movement. But this, look at it, got rejection from the zone, the order block, got rejection from the order block, and also the confirmation that sellers are active. The market dropped drastically, looking for the um, low. Okay, so you see that, see what happened next. Market came back again, market came back, struggled a lot, and again still continued the downside. And again it dropped drastically, very well, and from there that is when the market, the trade end. I think we also took a trade on the UDCHF. AUDCHF, still the same method on AUDCHF. You see that market has already gone down very strongly, targeting about one more than 150 or 20 pips. So the same thing that happened on the AUDCHF. I think AUDCHF, we took a set trade the first time, the market made some correction, and we took a second time trade. So this is the first entry. So the market moved on down to this level and start creating a correction. So I don't want us to miss it. That is why I just asked us to close the trade. So we close the trade with small loss, with small profit, and we keep the trade. I think I still came back to cross check the settings again. I don't want to delete the old setting, the setup. Then I draw my support area. Now once the price break this area or this trend line level, the market should continue. Okay, just like this. Okay, I draw this support that, okay, let's wait for a breakout. So immediately the price break out and see what happened. The market drop very well, and close with a bearish trend on Friday. Okay, so same thing. AUD JPY is also a bearish trade. I think we didn't take any trade on AUD JPY. I think we took a trade on AUD NZD. Where is the currency? It's not here. Okay, AUD NZD. AUD NZD finally went down. Okay, though the market is not good, and I don't want us to kind of miss this opportunity. That is why I asked us to close the trade. If I have known, yeah, and we focus mainly on this trade, we'll have keep the trade running for 5 days, starting on Monday. Keep the trade running for 5 days, and before you know, we make a lot of money from the trade. So now I'm going to show you one quick tip. If you enter the trade on Monday and the markets go down very strongly, on Tuesday it's still bearish, the market is still bearish. On Wednesday, the market is still bearish, and you have your target, and the market doesn't reach your target. Expect that throughout that week the market will be bearish, except the following week the market might decide to be bullish. So which means it's very easy for you to now trade the bearish trend. Okay, so the market is going down. See the way the market is going down. That was the AUD NZD. So we took so many trades, cat GBP CHF, something like that. We took a trade on GBP CHF, so it's very great. But the market is still bearish. You can see very strong momentum, very strong trend, very strong trend. Okay, so that is how to enter the sniper trade entry. These are just the introduction and what you need to know if you want to become a sniper trader. Okay, what you need to know if you want to become a sniper trader. Sniper trade entry is very easy to look for once you train your eye. Okay, I know some of you, even before we, like on Monday, you might be expecting me to give a signal by 7, or wake up in the morning and give a signal, let us buy this, let us sell this. I know why some of you might be doing some analysis and be checking the market structure by maybe once you come up with the correct structure and you know where the market is heading to. Once I just come up with a signal and my signal is the same thing as yours, you clap for yourself that you have already know how to trade. So okay, very simple. Want to become a snapper trader, you must follow the rule. Follow the rule, that means you must think as um, the institutional trader, think the way they think. Because one thing is that they know where you're going to enter the trade, they already know. Okay, they too, that is, they always choose support and resistance, supply and demand to enter that trade. So you two should be looking for support and resistance, supply and demand, a particular level. We have so many support and resistance, we have so many supply and demand. Okay, so you have to be careful on how you deal with them. Like I said, if you want to stay safe for them not to up your stop loss, always place your stop loss at a good level. Okay, some people like to choose obvious level. Place your stop loss where there's a clear technical um, levels, the support and resistance, where you can clearly see the support and resistance with your eye. Not level that today becomes support, tomorrow become resistance, the following day, the next day it becomes resistance, support, resistance, support. No. If you place your stop loss, they know that that is where you're going to place your stop loss, so they want your stop loss. So for you to be safe, it is either you stop using stop loss, know when you're going to close the trade, okay, or you decided to use the stop loss and place it where they won't not when they won't know where you put your stop loss. Okay, but so many traders, they usually place their stop loss where they usually target. That's why they have the guts to hit your stop loss before pushing the price in the direction you predicted. So by that time, they are looking for a way to bring you down. So all these institutional traders, they don't like us to make profit in trading. What they want is for themselves, their own personal goal. Okay, they want it from themselves. They want everything for themselves. But you have to be wise to find a good entry level to snipe your entry, to snipe your trade. Okay, to snipe your trade. So Monday to Thursday, we're having a good trade, a sniper trade entries, where the market will move down very strongly. Don't worry, guys. I'm going to explain to you reason why I like trading on long time trade than short time trade. I'm going to explain to you maybe in our next class. I'm going to explain to you tomorrow. We're still having a class tomorrow, but before then, I will let you know the time you're going to start. It can be in the afternoon, it can also be in the evening, but I don't know yet. Tomorrow, tomorrow is Sunday, so I will find out. I will let us know the time we're going to start. So I think I've ended up for the today's topic, introduction to sniper trading concept, the institutional trading method, institutional trading method, how they manipulate the market, okay, how they manipulate it, how they control it. If once you know how they manipulate it, once you know how they are, how they hunt for stop loss, you should be able to know where you too can also spray your bullet. Okay, you should be able to know there where you can also spray your bullet, where you can also buy or sell with the trend, capture the move. Okay, so that is that. Okay, I hope there's no question. Tomorrow we're going to discuss about the QML, SND, SNR, so many things that the institutional traders use for their sniper trading method. So I'm going to explain to us some of this method also. So I was talking about the live trade. Yes, there's going to be a live trade. That will be next week. So we're going to do the live trade next week. Okay, so be prepared. I think some of you in the group are still enjoying because it's just like the live trading. Anytime I buy, you also buy. Anytime I sell, you also sell. But this live trading section is going to be, you're going to see how I always analyze the market, what I used to pass through if I come up with a setup. Okay, what I used to check, what did I use to check, what did I use to pass through, what did I experience before I come up with a setup and we trade, and the market start moving to the direction that we predicted. So that will be what I'm going to discuss next week. So if you have any question, you can ask question now, or we call it a day. So anyone with a question? Okay, there's no question, so let's call it a day. Okay, guys, see you tomorrow. And I'm not sure about the time we're gonna start. Maybe afternoon or night. So I'm not sure. But before that, before we even start, I will let you guys know in the group. So I'll message you in the group and let you guys know. So for those of you who are just joining us, you can, if you need the video of the course that we did last some month ago or last section, even probably last year or even this year or even last month or last 2 months, anything you want, just chat me up, then I will send you the video so that you can watch. And about the video of Wyckoff, I know some of you here really need that topic. If you really want to know about sniper trading, not just the simplest one. This is the simplest method I'm explaining to you. But the hardest part is for you to go through the Wyckoff trading concept. So if you go through the Wyckoff trading concept, you will see that it's very hard. Okay, this is the simplest one. So if you need the I think I had a class about the Wyckoff. So those of you who are new to us, and if you need the video about the Wyckoff, then you can let me know. Then I'll send you the video. Okay. See you guys tomorrow. Have a nice day. Bye bye.